Hello, good weekend to all. It's Adil, Mr. Intermarket Analysis, bringing a review of the FTSE 100 for Monday's trading, the 23rd of December 2013. Not long to go, folks, not long to go at all before it's the new year. I think we have Monday's trading, and then we have a half day on Tuesday, and then I think that's it. Then I think for the year, there might be a few odd days that we may trade, but the volume is going to be dry. I mean, totally dried up, and we'll see exactly what's happening. Now, talking about volume, obviously that's been a key factor this week, and given the fact that the markets are short squeezing higher, it generally tends to do that on a light volume type of scenario or type of environment, so it makes it very tricky to trade. For example, this week I remember I was 140, 150 points at one time, and then I ended up finishing at plus 40 for the week, so back down to 40 points for the week. So very tricky week. Just about managed to scrape with a positive gain for the week, even though I was up, like I said, 145 points at one time. So it's been very tricky. A lot of volatility. I wouldn't say volatility. I'd just say a lot of vertical moves a lot of short squeeze activity going on. So kind of tricky to read as well, especially given the fact that all week we've had the Chinese stock markets down, and Shanghai and the Hang Seng generally tend to be very good leaders. We even had Nikkei down one day, and yet the European equities and the US equities continue to short squeeze higher, which again, like I said, is very tricky to read. If Shanghai or the Chinese markets are down, then it's very unlikely for you to see the European US markets following through. So very, very tricky from that perspective. What can we say, folks? What can we say? Also, add in the fact that we also had tapering as well. Tapering obviously should be interpreted as market negative because the Kool-Aid is not there, or is not going to be there going forward, and obviously going to start drip feeding the system, especially given the fact that the market wasn't expecting any tapering at all. Majority of the economists out there, except a few that are obviously good, but the general chap, or in the market, the way in which it was positioned for no tapering at all. A lot of people didn't expect that, given the fact that it's Christmas, etc., etc. But they did. Okay, not only have they actually stated tapering, they said that they'll do it to 10 billion each time they have a meeting. So going forward, so whether that's every quarter, every month, etc., etc., that's totally up to them. Okay, generally it's every quarter, and that really does help the US dollar move higher. So if you look at the US dollar chart, I can bring one up for you. It means that the US dollar is going to strengthen and go higher. If the US dollar strengthens, given the fact that we've got an inverted head and shoulders pattern here, target would be around the 82, 200 MA first of all. The US dollar strengthens, commodities come under resistance, and obviously the FTSE itself gets hit. Okay, so that's the thesis. Okay, and as you can see here, certainly US dollar is appreciating, and we have the commodities index, which has put a topping tail there. That's a classical topping tail, although it has broken out of this bearish channel. But what we're more interested right now is a topping tail. So when the actual CRB index, or the commodities index, is putting in a topping tail, it certainly needs to be respected. Okay, so given the fact that we put a topping tail there, so keep an eye out for that. Given the fact that we got tapering, US dollar appreciating, etc., etc., then expect a sell-off on the FTSE itself as well. So tricky markets, right? Okay, at present. If you look at the chart of gold, obviously it's been weak. Obviously that causes FTSE weakness as well, given the fact that the inverted head and shoulders there failed to play out, and obviously the commodity stocks get hit, given the fact that gold price is down. Yeah, the FTSE moved higher again. Like I said, very conflicting, a lot of confusing news there. Obviously 200 MA on the oil price, that's at resistance. There is an inverted head and shoulders pattern that needs to play out, given the fact that GDP is better than expected. So that's certainly a counter argument, given the fact that obviously oil prices at 200 MA. Whether this inverted head and shoulders plays out or not, we'll still have to find out. Okay, so we'll sort of stay neutral on that, to stroke bullish, and see exactly what happens with oil, especially given the fact that we've got growth in the world at present. Okay, so copper itself obviously struggling now. You had an inverted head and shoulders, but obviously moved higher, and obviously you've had a bearish engulfing candle. So given the fact that the US data was mixed, I mean, your GDP gets smashing expectations, but yet jobless claims rose. Also, how US house sales pull back as well. So again, conflicting. There's no real consensus or confirmation, etc. there. But all we need to know for now is that the copper has held resistance. So, given the fact that the US dollar is going to be appreciating and commodities are priced in US dollars, obviously one would then assume that there's an inverse relationship. Therefore, commodities go lower and US dollar goes higher. Okay, and that obviously does not bode well for the FTSE 100. Okay, that's basically that in a nutshell. Okay, so yes, the economic data out of the UK. Let's discuss that. Okay, the retail sales didn't come out as high as expected, so that was a bit of a damper. Although the unemployment rate obviously has dropped, so that obviously that supports the argument for higher rates going forward, and that's why sterling has certainly been on a stellar rally, or a sterling rally, shall we say? Sterling on a sterling rally. So yes, so basically. We do have, if you look at a 60-minute chart, or should we go to a daily first? Let's look at a daily chart. Yep, you did have the H&S formation. It was about to play out, and then it's failed. Okay, so it's been negated. You had a negation in one day, so that's quite a move. So let's just get rid of this pattern for now, and all we can conclude from here is that we certainly have some sort of topping tail here. So let's just see exactly how this plays out. But again, this is, or we could have a potential bull flag scenario here as well. So, but given the fact that you've got news out of the US with regards to tapering, that's certainly the US dollar positive. So that's certainly not a good sign for sterling itself. So again, we'll have to examine this and keep monitoring this and see if we can get any sort of pattern establishing to the downside. Okay, so that's basically what we're looking at there. I think the key chart really everybody should be looking at with regards to the actual FTSE itself is Euro GBP, especially given the fact that Mr. Carney this week did emphasise Euro GBP, given the fact that the majority of the exports come from there. Yeah. Okay. So as you can see there, we've got a bearish engulfing candle, so that's certainly not looking good. Okay, that's obviously positive for sterling. And the inverted head and shoulders pattern did attempt to play out and then failed miserably. Yeah. So whenever you have a failed pattern, what happens? Your market moves emotively in the opposite direction. So now we have a potential here for a H&S here. You got the left shoulder. Let me just get rid of the IHS now, given the fact that the IHS has failed. Okay, so get rid of all this. Get rid of this. Get rid of this. Get rid of this. Okay, so basically what do we have here? And so we have this head. Okay, you're creating a right shoulder, then down we go. And we test this level around the 8240 level below. Okay, that's basically what we're looking for. Okay, there. So keep an eye out for that. Okay, certainly observe and watch that. Okay, so that's certainly what we're looking for. Okay, so yes, folks, certainly watch out for that. Okay, with regards to Euro GBP. So if Euro GBP is obviously negative or forecast negative now going forward, then that obviously doesn't bode well for UK exports. Yeah. Okay, so just bear that in mind. Okay, so. Let's go back to our FTSE chart now. What I'm supposed to be analysing here. Okay, so Okay, let's start with the weekly. Weekly, I've already explained. I've got on my fundamental analysis service. I've got a swing short on the FTSE. I'm looking for a target of 6100 on a downside. Okay, I started to enter around the 6561 level. I've got an average around 6567. I'm happy with that. I've got a 200-point stop on it. I'm looking for the right shoulder to play out and the market to get flush going into, well, starting from the new year. Okay. That's my long-term objective, and I expect this trend line to be tagged on the downside and re-hit the 6100 level. That's definitely my target for next year. Okay, let's go to a daily chart. So the daily charts. Okay, so we're into resistance here now. 6510 and then 6530. So watch out for that. Okay, I've got a live analysis service. I've got a trade on a live analysis service. So I've been short from 6590 region. Okay, and I'm looking for a target below. Okay, so a good 30 to 40 point drop. Okay, so okay, understood. Right, so that's basically what we're observing there. So basically, previous support equals resistance. Okay, that's basically a nutshell there. Okay, previous support equals resistance. Okay, FTSE 250, the one that I generally tend to follow, horizontal resistance. We're into that resistance zone now. If you do pop higher, then obviously you've got the 15800 level that will act as resistance, given the fact that you've got a rising channel. But having said that, I can't see the FTSE moving higher from here, and I'm certainly looking for a reversal going into Monday's trading. Okay, so a 60-minute chart now, folks. Okay, 60-minute chart. We've been in this wedge pattern here. Obviously, we've certainly broken out to a certain extent. We have retested it. The market obviously has bought it. Okay, but we do have an unfilled gap below. Okay, so we've got an inverted head and shoulders, and the target was 66660. 660. I don't expect that target to be hit, especially given the fact that now we've filled this gap, which was the magnet, and the market was attracting us towards. The gap has been filled, and now we expect the markets to move lower. That's basically my understanding. You've got a bearish, consolidation here, and then we should flush to the downside. Okay, so especially given the fact that the gap has closed and the market does want to move in the opposite direction, and we have an unfilled gap below. And this inverted head and shoulders can't work out. Why? Because there's an inverted head and shoulders on the US dollar index. And obviously the CRV index I've already explained is under pressure if the US dollar rises, and the markets generally come under pressure as well. Okay, so keep an eye out for that. And this inverted head and shoulders pattern to fail, and this gap to close at 6490 on the downside. Okay, let's go to a 10-minute chart now. 10-minute chart, obviously you can see a double top's already been formed. We do have this channel, this expanding wedge pattern here. Two expanding wedge patterns, both are broken down to the downside. Double top confirmed at 6517. You've got the left shoulder here, right shoulder here, boom, down we go. So looking to test around the H&S formation 6588. 6618 to 6588. So you're looking at around a 30-point drop. So you're looking at 6560 on the downside. 6560 does equal previous resistance equals support. If obviously flush lower, then you're looking at the 200 MA at 6540, and then you've got the unfilled gap below, which is acting like a magnet, and that must close at 6490. So certainly not looking good going into next week. But again, like I said, folks, light volume, a lot of manipulation going on due to the holidays. Just look at the euro. That is one hell of a manipulated variable at present. Why? Because light volume, they can do whatever they want. Okay, so it is. That is one of the reasons why I didn't do that well last week, because there's a lot of short squeezing going on given the light volume. I mean, just look at that move here. This move from 1330, big rally here. Okay, a big rally here. Then obviously the market pulls back. Now this rally occurred even with strong US GDP data. Now logic will tell you that strong US GDP data generally is a fundamental trade. Therefore, the US dollar appreciates, moves higher, and the euro would come under pressure. Okay, so yeah. Strange. Okay, strange shenanigans, strange happenings, strange ongoings. But it's all part of the market, folks. We keep our stop losses in, and obviously that's our protection. That's basically what we're focused on. Really, at the end of the day, that's the only thing that really protects us. For example, this trade here, I had a stop loss at 1.3715 on my euro short, and the market flushed as low as 1.3665. So. And I managed to get out for about plus 28. So it's now at the moment it's struggling here, and we're looking to flush on the downside. Okay, so it's going to be a risky market because of the volatility, etc. But that's all part of trading. It doesn't really matter to us. We put our stop losses in, we do our analysis, we study the setup, and we take it accordingly. If it fails, so be it. It hits your stop loss, you move on to your next trade. You're not psychologically scarred. Always keep a positive mindset. And you'll always succeed. Okay, so it's all about those setups, folks. Keep studying, keep learning, keep educating yourself, and always do your homework in advance. Okay, and be ready for whatever the market throws at you, so you can react accordingly. Okay, call it quits there, folks. So risk on, risk off, wax on, wax off. Goodbye now.